Hey, welcome back to another video. So today I am going to walk through how I evaluate new options trades here in the market, right? So there's a ton of ideas that are out there. And so I'm going to show you exactly what I walk through, how I start with the macro regime. I dive into a particular position, I do the quant analysis, and then I put the trade on. And so if that's something that you're interested in, stay tuned. Be sure to watch the full video. Stick around to the end and I'll show you exactly what I do. So if you're new to the channel, hi, I'm Prosper Jonikin, former hedge fund manager, now the founder of Trade Tonic. Trade Tonic is an options intelligence platform that delivers high performance options intelligence that converts macro and quant insight into consistent high conviction trades. And so we're going to dive into the Trade Tonic platform right now and show you exactly how I use this platform to find really good opportunities in the market and make consistent money. So let's go ahead and dive in. So the first thing we want to do is let's take a look and see, because we put some trades on in our last video. So let's take a look and see what those positions are doing right now. Right? So if we scroll down, we're looking at this pairs trade on Meta and Nvidia. So the rationale behind this trade is the z-score spread between Nvidia and Meta was fairly wide, right? It was at 5.28. And so our thinking was that z-spread was going to collapse. And that's what's been happening. So when we put the trade on, the z-spread was at a sigma of 5.28. Now it's at 4.95. And so when you're doing a pairs trade with an options overlay, essentially what we did and how we structured this trade was we bought Meta stock at this entry price, we sold Nvidia stock at this entry price, and then we overlaid that with some options, right, to kind of take advantage of the volatility move as well. So we hedged our Meta long with selling some calls on Meta and 600 strikes, and then we hedged our Nvidia short by buying 205 strike calls on Nvidia. And so we put this trade on, I want to say it was just a few days ago. So yeah, today's the 27th. We put this trade on the 24th, which was on a Friday. And so far in this position, we're up $336, which is pretty good, right? So it's a hedge trade. So we don't have a lot of exposure, right? So our long side is protected by our downside hedge, and then our short position is protected, with a call on top of that, right? And so that's our hairspray with the volatility overlay of Meta and Nvidia. We have another pairs trade, very similar strategy with Meta and Apple, and then we also did an iron condor on Apple, right? So we took a look at our paper trading, and so far we have a P&L of about 200 bucks, which is really good, right? So it's really good. Those trades are working in our favor. Now let's go ahead and go back to the dashboard. Now the last time we were in the dashboard last week, the market environment was mostly like a stagflation late cycle regime, right? And we know the Fed is actually coming out and they're having an FOMC meeting this Wednesday. And so this is something we want to keep in mind, right? And kind of say, okay, we've moved from a stagflation to more of a reflation market environment, depending on based on the macros. Now, how would that impact interest rates, right? And so what I'm just sharing right now is just my line of thinking, right? My line of thinking. And so when you're thinking about investing in the market or you're thinking about trading, you want to put together a thesis, and that thesis needs to be based or premised on some type of fundamental idea, right? What's the idea? What thesis do you have? And what are some things that are showing confluence to give you some type of confirmation of your particular bias, right? So if we dive into some of the macro details here, like I said, we see that we're in a reflation late cycle stress volatility environment. Now, the reason why that's important is because if you watch the videos, you know that depending on the macro regime, that determines the type of strategies we want to execute when we're doing these options trades, right? So it says reflation late cycle tightening, and it's a composite reflation environment. with elevated volatility and credit stress. And so we ask ourselves, what types of opportunities usually make sense during this time? And it's very similar to the stagflation regime. So we're looking at some collars, some protective puts, and some bear put spreads, right? So we're going to be looking today at how we can find some opportunities that are either in a collar structure, a protective put structure, or a bear put spread structure on with high conviction and high probability of profit or reasonable probability of profit, right? So we take a look here, the 2-10 years curve, yield curve that's been falling. The initial jobless claims have been falling. ISM manufacturing new orders is just slightly above 50. So that's definitely neutral. And then we have some headwinds here with core PCE. I think new PCE numbers will come out this Friday. And here on the platform, this updates at least once a week. And so next week, when we come in on Monday, we'll take a look and see, okay, well, what's happening with the environment? Has there been a lot of change? So now that we've taken a look at the macro regime, right? So again, we're going to look at collars, protective puts, and bear put spreads. Let's go see if we can find some top plays from our quant models and our data models that will give us an opportunity to take advantage of those. So we're going to keep scrolling here. We see we got this collar on Apple. We have some verticals on Nvidia. Let's see, SPYs. Let's see if we find any in the quant lab. There's Google. There's a short strangle on Nvidia. All right, so there's another. All right, so we have an iron condor for Apple. That's one that we can keep in mind for this particular environment. And then there's a pair spread for pairs trade, right? So nothing there. Now let's go to a strategy builder and let's see if we can put together a strategy. Let's look at Nvidia. So we take a look at Nvidia stock, see where it's trading. Right, so today Nvidia has a big sell-off. It's down about 5% for the day. We're falling. We're about to retest this 200-day moving average, but on a daily chart, this looks bearish. To be honest with you, it's below the super trend. The super trend is telling me that it's bearish. We're looking at the weekly. It looks like it wants to at least hit the 50-day moving average, and if that doesn't hold, then Nvidia could potentially touch 176. But I think we're going to get a bounce here around 190 or so, right? So in the very short term, this 200-day moving average could serve as support. So we want to keep that in mind, right? So if we go take a look at Nvidia, and we'll do the August 21 strikes, which is about 25 days out. So we're going to take a look at Nvidia, and we're going to see if we can find a collar strategy, a bear put spread strategy, or a protective put strategy that makes sense for Nvidia. All right, so if we take a look here, we're going to look at some bullish trade. So let's look at a bear put strategy and let's see what we're able to get. Right, so in this particular trade, our quant model and our analysis tells us, well, we could buy the 200 strike puts for $10.20, and we could sell the 190 strike put for $5.80, right? And so this is going to be for a net debit of $400 or $4.32. Now, if we take a look at the P&L opportunity, right? So the probability of profit is about 55%, which is more than half, which is, in my opinion, anything above 60% probability of profit is actually really good when you're thinking about trading, right? So you want to kind of think about it from like a batting average standpoint. So anything in like the 0.3 point, right, especially with if the risk reward is greater than 1. So the max profit on this particular trade is 568. We're risking 432, and so the risk reward is 1.3 to 1. That's the bear put spread. Now let's take a look at see if we can find a. Let's do a volatility play. So let's try to do an iron condor, and that trade doesn't work. So we can also do a short straddle. Now, the probability of profit for this one, actually, we wouldn't want to do. Let's do a long straddle, right? Now, the probability of profit with this one is we're going to say that this long straddle, we're assuming that Nvidia will stay within this price range of 189 on the low end and 209 on the high end. Now we're risking $963 for this particular trade, but the probability of making money is fairly high. So if we're assuming that the stock moves outside of this band. I think I misspoke there before. So we're assuming that the stock itself will go below 190 or above 209 between now and August 21st. Right? And so we're saying that the stock will move outside of this band right here, but we see that there's support here, and then some resistance there. Now, let's see if we can take a look at, instead of going long the strangle, let's see if we go short the strangle, right? Now, we're saying that we think that the stock will stay within that price range. All right. Now, let's take a look at a long straddle. Now, with the long straddle, we're saying, excuse me, a short straddle, we're saying that we think the stock is going to pin at this particular price. Well, I don't think that's going to happen. So it's either going to be a long straddle or a short strangle, right? We're either going to do a long straddle where we say that we know for sure the stock is not going to stay at the current strike price of 197. It's going to either go up or go down. But the stock will need to move at least 10% from where it is today within the August, from between now and August 21st, which is 25 days from now. Now, because we're not 100% sure of that, and with this particular trade, we're risking $1,775 or $1,775 to make a max profit that's potentially unlimited. So we would expect for the stock to move 17% or 20%, but it needs to move at least. I think for this particular trade or this particular stock, Nvidia, the one that kind of makes a little bit more sense is the bear put spread, right? Now, this is the bear put spread is in line with the regime that we're in, right? It's in line with the regime that we're in. If we go back and take a look at the chart, we see that there is the 200-day moving average there. So that may start some support, but the question that we're saying is, do we think we can break this 200-day moving average to the downside and get to around 190, right? Which is around the same price of where the 200-day is. Now we're saying that, what's the range for this particular stock? Okay. Yeah, so if the stock falls to 189.72, which is right in the area where we're talking about, that 190 area, then we would make the most money, $568. Now, if the stock were to rise to 199, then we would essentially lose most of our premium, right? So the question is, do we think the stock could, in the next 25 days, recover from this big sell-off that we're seeing today? And so I think the odds are a little bit more in our favor for the stock to hit 190 or 189 versus it going up to 200 or 201. So I like this bear put spread strategy on Nvidia. We're going to put this trade on. So what we'll do is, right, so we got the bear put spread. We're going to go long the 200 strike at a premium of $10.20. We're going to sell the 190 strike put for $5.88 for a net debit of $4.32. And so let's add this to our paper trading portfolio. So now that that's added to our paper trading portfolio, we're going to come in here and see the position that's been added, right? So we see that the position that we're in right now, we've added the trade, and since putting the trade on, actually, the reason why it says 96 bucks is because I didn't change the size of the position. So let's go ahead and close this out because we want to make sure that we're just trading one share, one option, well, one contract per leg. And I think that one right there had us at 12. And so that's why we saw that $96 increase there. So we're going to come back and we're going to put the same trade on, right? So the bear put spread. Now we're going to make sure that we choose a conservative on this. And yeah, it's the same strike, the 200 strike, the 190 strike for it's 440 now. It was 432. So we're going to, it's going to cost us about 8 more cents, but the risk reward is still the same. So let's go ahead and add that to the paper trading portfolio. And boom, we're going to see that here. Right? So we bought it for 440. The market price is at $4.40, and we bought one contract. So we're going to keep an eye on that. We're going to watch that. So that's exactly how I walk through my approach to finding opportunities in the market, right? And the reason why I'm showing you guys the paper trading component is because once you're in the Trade Tonic platform, you can say, okay, well, you know what? I want to learn more about these strategies, right? Like I'm not familiar with the bear put spread strategy. So let me test these strategies out before I start putting some capital at work, right? So you can do that right here in the Trade Tonic platform. So you can go from market regime. You can go from the market regime to finding really, really good ideas, putting those trades on, or at least having an idea of where to start with that particular strategy based on that market regime. Come into the top plays or go to the quant lab, or in this particular case, like what we did today, build your own strategy on a particular stock that you like, put it on, do the risk reward analysis, see if it makes sense, and then add the position to your portfolio. So that's all I got for today. Be sure to like and subscribe. My goal is to get to 10 followers on this channel. Right now, I think I'm at 7 followers or subscribers. So do me a favor, if you're still watching the video, like the video, subscribe to the channel because I come on and I post new content every day of showing you guys how to make money using options and using a lot of different strategies with options. So whether we're doing some pairs trading with some volatility overlays, or like what we did today with the bear put spread on Nvidia, there's a ton of option strategies that are available in the market. And using Trade Tonic, you have access to over 35 option strategies that you can implement that the system will help you create itself. So that's all I got. Until the next video, I'll see you guys soon.